Welcome to RNDTI Insights, a podcast dedicated to bringing you news and information about the Research and Development Tax Incentive Program and what this means for Australian businesses. Brought to you by the Department of Industry, Science, Energy and Resources.
Hi, I'm Scott Murtagh, your host from Oz Industry. Welcome to the next episode of RNDTI Insights. Today, we welcome two guests from the co-administrators of the RNDTI program, the Department of Industry, Science, Energy and Resources, and the Australian Tax Office, to discuss reforms to the program announced in the 2020-21 federal budget. With some taking effect from 1 January and the others from 1 July next year, these reforms will provide companies with certainty about the RNDTI and allow them to plan their R&D. With me today is Kelly Wiggins, the Acting General Manager at Oz Industry in the Department of Industry, Science, Energy and Resources, and Jade Hawkins, the Assistant Commissioner at the ATO. Thank you for joining me, Kelly and Jade.
Thanks, Scott.
Thanks for having me, Scott.
Can you tell us a little about your roles and the role that each of your departments play in the RNDTI?
Sure, Scott. Kelly here. I'm the Acting General Manager of the RNDTI here at Oz Industry. Oz Industry administers the RNDTI on behalf of Industry, Innovation and Science Australia. Our role is to provide guidance and assistance to companies who are registering their R&D activities to claim the R&D tax incentive. We do this by providing guidance on the eligibility of activities under the program and maintain the integrity of these activities and the program itself.
And I'm Jade Hawkins, Assistant Commissioner at the ATO, where I lead one of our technical leadership and advice areas. Part of this role involves owning the research and development risk for the ATO, which means I'm responsible for delivery of the program and maintaining and enhancing its integrity. This involves helping companies understand and claim the right expenditure linked to their eligible R&D activities. This can be through updated web guidance, public advice, such as our recent taxation determination explaining the interaction of the RNDTI and JobKeeper, or even joint podcasts like this one, explaining implications of the new legislation. Further, whilst most companies do the right thing, we do have a targeted compliance program for those that are involved in fraud or evasion or schemes that undermine the integrity of the RNDTI.
Thanks, Jade. And I just want to highlight these distinctions are really important to note when putting in an RNDTI application. And I encourage listeners who are interested in learning more about the RNDTI application process to head back to episode 1 in this podcast series and have a listen. Now, Kelly, can you provide our listeners with some further background to the enhanced reforms announced to the RNDTI in the latest federal budget and how they'll benefit companies?
Absolutely, Scott. The RNDTI is the largest government support for business R&D, providing over $2 billion of support to companies annually. The government announced the reforms to the R&D tax incentive as part of the 2021 budget. The aim of those reforms is to better encourage companies to undertake additional R&D activities that will generate benefits for the wider Australian economy in our post-COVID world. The reforms were passed by Parliament in October 2020, and the majority will come into effect from 1 July 2021, with the exception of some administrative changes that will take effect from the 1st of January 2021. We estimate that more than 11,400 companies will be better off as a result of these enhanced reforms. And that provides companies who are conducting eligible R&D with certainty to forward plan their R&D activities and expenditure from 2021. And we know that this will support investment, growth and jobs. Importantly, these reforms are now legislated and will be ongoing.
All right, let's discuss some of the key reforms and what they mean for companies. Kelly, what are some of the key changes from your perspective?
To begin with, we will now be able to make what is known as a general determination, which is essentially a legally binding ruling about the eligibility of activities under the program, and that will help provide clarity and resolution for companies applying. Extensions of time to apply to the program will be capped at 3 months unless the extension is granted to allow an applicant to wait for the outcome of a separate pending decision. And lastly, the Board of Industry, Innovation and Science Australia will also have the ability to delegate their functions to be performed by members of the Oz Industry team. And Oz Industry hasn't yet determined how these delegations will be assigned for integrity activities, but we will work very closely with Industry, Innovation and Science Australia to ensure that these delegations are issued appropriately and at the right level.
Thanks, Kelly. Jade, how about some of the changes, particularly from the ATO's perspective?
Thanks, Scott. There's a number of important changes to the refundable and non-refundable offset rates for all companies. Firstly, there has been a replacement of the current 43.5% refundable offset with an offset of 18.5% above the company tax rate, up to the expenditure threshold. Importantly, the offset will be linked to the company tax rate rather than a flat rate calculation. Also replacing the current 38.5% non-refundable offset with a two-tier intensity premium, up to the expenditure threshold, again linked to the company tax rate rather than a flat rate calculation. This involves, for 0 to 2%, an 8.5% premium to the company tax rate, and for greater than 2%, a 16.5% premium to the company tax rate. This is calculated by dividing the company's R&D expenditure by the total expenditure.
Okay, so have there been any changes to the R&D expenditure threshold for companies?
Yes, indeed there has. The expenditure threshold has been increased from $100 million to $150 million. This is a huge change that should go a long way to encouraging greater investment by eligible companies in large-scale R&D activities. It's important to note that how this threshold is applied remains the same. It's just at a different higher value, and there'll no longer be a sunset in June 2024.
Thanks, Jade. So are there any other key changes that companies should be aware of?
There's also been amendments to the feedstock, clawback and adjustment provisions, whereby the amount applied for will no longer be an approximation. It will adjust for the exact offset amount. And importantly, the ATO will build these changes into our online calculator to assist companies to correctly calculate these amounts. In addition, an amendment to Part 4A, which is the ATO's integrity provision, was also made to include a tax offset as what's known as a tax benefit. This is important because currently Part 4A does not apply to a tax offset, and the amendment will enable the ATO to better target those really egregious cases. The legislation will apply to audits undertaken in the 2020 to 21 income years onwards. And a final measure from the legislation is the publishing of individual companies' claimed R&D expenditure, with the first publication being 2 years after the end of the financial year. As the date of effect of the legislation is the 1st of July 2021, the end of the financial year is the 30th of June 2022, and the additional 2 years mean the first publication will be as soon as practical after the 1st of July 2024.
Thanks, Jade. What are AusIndustry and the ATO doing to support companies and their advisors in preparing for these reforms? And is there anything that companies and their advisors should be doing differently when preparing their claims for 2020-2021?
Well, from an AusIndustry perspective, while some administrative parts of the reforms will apply from 1 January 2021, the existing application process remains the same. Most of the reforms discussed here will apply from 1 July 2021, so companies can complete their current year applications and begin to plan their future R&D investment with certainty. Of course, AusIndustry will continue to consult and seek input from industry and stakeholders to ensure they remain supported when engaging with the RNDTI.
The ATO is also committed to assisting clients with their expenditure claims, so it's important to note that the impacts of the R&D legislation will be tiered. So whilst the ATO will commence updating our web guidance, it will be done progressively. This is because the current 2020-21 year isn't affected by the law change, as the legislation has a date of effect as 1st of July 2021. So claimants don't need to do anything in the current year. The ATO will then publish updated guidance before the new legislation applies in the 2021-22 year. In addition to updated web guidance, we'll also be making changes to the company tax return and R&D schedule instructions, ready for publication in May-June 2022. Further, we'll continue to work with software providers for delivery of their updated products, also expected in June 2022.
Thank you so much, Kelly and Jade, for joining us today. It's been great to hear more about the reforms and how they'll impact Australian R&D. If you'd like to know more about the RNDTI reforms package or seek support for your company around these reforms, please visit business.gov.au/RDTI or ato.gov.au. You can also find this podcast and other episodes on the business.gov.au website under News and Events. Thank you for listening. We look forward to continuing to share more information with you in future episodes. Goodbye until next time.